We bring on board Pankaj Pandey from ICICI Direct to give his view. First off on TCS, Pankaj, very quickly, what's the take there, risk reward versus how you're reading the result at this point of time?
Yeah, hi, good morning. I hope I'm audible.
Very audible,
on
Pankaj.
TCS,
Thank you.
overall
Good morning.
sense is that, while the numbers are on expected lines, but we are still not seeing a broad-based recovery. And I think the only factor which is in favor of IT companies or TCS in particular is the valuation, but that is not really sufficient enough. And which is why we have downgraded the stock to hold from the previous values.
Pankaj, I want to switch over and speak about Dr. Reddy's. That was the big mover in trade yesterday. They came out with their con call. The con call suggested that production for semaglutide will ramp up only in November now. There's an EPS knock for FY27 that's expected to be maybe single digit, late single digit. How should one read into, one, the commentary that DRL has given last evening, and two, the impact of that on earnings and stock price, in your opinion?
Sorry, I'm not able to hear.
Okay. Okay. So Pankaj, we'll fix that. Okay. I'll request producers to please fix that and the director. But let me go across to Kunal. Kunal, DRL, what's the view there now on charts after the kind of knock the stock saw yesterday?
See, after yesterday's price correction, the stock would probably just about take another few days to try and consolidate. But I would sense that this could probably be at a say over the next 1 week, 10 days. If the stock corrects by another 3-4%, then I think the risk reward could be a little bit more attractive, because what happens is that there's an initial knee-jerk price action for the stock price, then a residual inertia-based correction for the stock based on the initial gap down or the fear selling on the back of news flow. But once the prices settle in, that's where I would believe that a better risk-reward opportunity originates for stocks in this category. So I think for Dr. Reddy, that level could be closer to 1200, 1180 mark. So if in case the stock falls by another 40-50 points, I would sense that contractors should try and chip into this name.
And what about the defense pack? That'll be the other one which will be in focus today. Apollo Micro taking over Premier Explosives. How are both of those looking like on charts?
So I think Apollo Micro, I've seen the charts, and the stock looks fairly strong. In fact, very few of the defense names, the non-FNO related stocks, they are the ones which are actually done very well for themselves in the last 2-3 months. We've seen almost like a 20% plus kind of a move for these names. So it looks like that this move should sustain for Apollo Microsystems, and I think there could be a possibility that hopefully post the news flow for the stock, you might see a further upward move as well as a further strong push into the stock price.
The other one which will buzz very likely will be Dixon. The Vivo JV, plenty happening, viewers. The Vivo JV approved now. Maybe 60 odd days for production to start there. Broadly, that's the timeline that our understanding based on the commentary that's come through. Mithali here with the details.
Right, talking about Dixon Tech, it has taken a major initiative in the India smartphone manufacturing space by signing a definitive agreement with Vivo India Mobile to establish a joint venture. Now, under this JV, 51% of the stake, the controlling stake, will be held by Dixon, while another 49% will be held by Vivo. Also, the government approvals for the JV has also been received. Now, the significance of this deal actually lies in its scale. At full ramp up, the JV, it could manufacture around 20 to 22 million smartphones annually and potentially handle nearly 2/3 of Vivo India's production. For Dixon, this actually provides strong long-term order visibility and could translate into nearly 30,000 odd crores of incremental revenues at its peak scale. The margin story is equally important. So Dixon Mobile's manufacturing business, it currently operates at an EBITDA of 2.8 to 3.2%, excluding the PLI benefits, and with higher volumes, operating leverage, as well as the backward integration into components such as display as well as the camera modules, it could potentially add further 50 to 70 basis points over the longer term. Now, strategically, this deal also strengthens Dixon's position as India's leading electronics manufacturing services player. And importantly, this is not an exclusive deal. Dixon can also manufacture the same for other brands as well. So that gives an extra leverage for Dixon. So for investors, as of now, the execution as well as as the pace of ramp up will now be the key factors to watch. But for sure, Dixon Tech is going to be the stock in focus in today's trading session.
Thank you, Mitali, for that. Pankaj, do you have a view on Dixon? The JV is now operational. You're going to see volumes coming in FY27 itself, a possible revenue upgrade and EPS upgrade?
Yeah, so we have upgraded the target price for Dixon to 16,300 largely because the FY27 it was expected that the volumes might remain flat at 3.3 crores. But with this kind of a JV, we will see incremental volumes of about 2.2 odd crores, and this comes with a higher average selling price as well in the range of 14 to 15,000 odd. And obviously, margin-wise also it becomes better. And I think they've become quite a significant player in the Android smartphone ecosystem. So I think this JV has come at the right time, and we feel that this stock could deliver earning CAGR of about 40% with a bottom line slightly higher at 46 odd percent. And like I said, we've upgraded the stock to buy with a target price of 16,300.
Kunal, Dixon, Kaynes, all so charged up since those March lows. The entire EMS pack.
Absolutely, Asha. In fact, the kind of sudden release of momentum for these stocks is, surprising to see. And of course, very positive and very heartening because, these were the kind of stocks which had outshined, outclassed in the previous phase of a major bull market from 2020-21 to 24 odd. And from there, these stocks had corrected more than 40% to 50%, from their 2024 highs. It was a struggle for these stocks to even come back to their 50-day moving averages. But then I think what we've seen so far is that Dixon, for example, yesterday or day before, managed to come back to break above its 200-day moving average after a gap of almost 9-10 months for the stock price. So that tells you that it's been a struggling period for these stocks over the last 1 year approximately. But it's good to see these stocks going back into a revival phase and then coming back, into their own kind of a price volume theme. We've seen historically that these stocks have a tendency of moving into clusters of volumes, and that too backed by strong price action. So we've seen that happening for Dixon Tech. Even recently, for example, you look at the charts in the last 2-3 months from the March lows, the stock has consistently made a pattern of higher highs and higher lows. Kaynes was the only one which was struggling, but I think looking at yesterday's price action, the closure above 50-day moving average for the stock, I would sense that even Kaynes can make a very strong comeback. So both these charts look attractive over the near term.
Pankaj, before we snapped your audio line, you were talking about your thoughts on Dr. Reddy's and whether this makes for a buy, yesterday's crack that is.
So Aisha, our sense is that this issue has the potential to dent their top line or impact their top line in the range of say 2,800 to 3,000 odd crores, which is some 6 to 7 odd percent of their overall revenues, and a proportionate decline in EBITDA as well. We continue to like DRL while this, and we have already seen the kind of impact on the prices yesterday. But our sense is that the company is sort of shaping up well in terms of generic plus innovation side, and also they've been sort of ramping up R&D. So, and domestic side, we are seeing most of these tier 1 players are delivering a pretty good growth. I think DRL recent domestic growth has been in the range of about 13 odd percent. So while yes, export because of higher base of Revlimid may not be really visible in terms of numbers, but our sense is that domestic growth plus, if I exclude the impact of Revlimid, I think pharma stocks or Dr. Reddy in particular are better placed. What we like more is again the companies which have got a higher focus on the domestic side, the likes of Torrent. I think there the growth rate is going to be a lot more better. Export is something which is going to be a lot more volatile, and I think we have already seen the instances of that. But overall, we are liking the pharma space, including tier 1 names like Sun Pharma plus DRL plus even this company as well. And I think one more company which we have started to like more is Zydus Life Sciences. I think this is one company which is talking of 17% kind of a CAGR growth with pretty good margins. And has been a laggard, but is expected to sort of catch up with peers.
Right, interesting. Okay, well, today, of course, it'll all be about TCS. And in fact, the pre-open rates should have trickled in by now. Let's check in on what those names are up to and what kind of fillip, if at all, is it giving to the rest of the Nifty pack as well, given the high weightage of the IT sector. Want to start off with TCS first, a 1% move up on the Nifty, 200 points in the green. Surely IT has to be contributing. 1.5% higher for TCS. I want to check in on what Infosys as well is up to. And then, of course, the likes of Persistent, Infosys, etc. Whether they're having a more broad-based impact, clearly they are. At least Infy is holding out well. HCL Tech should also come up for you on your screens next. Most of these names, I assume, would be up in the green. For Muthoot Microfinance, it's been, by the way, a very strong quarterly update. The AUMs have seen an uptick of 18% on a year-on-year basis and 3% on a sequential basis. Anand Rathi numbers came out. The FY27 revenue has risen about 17.5%. So look out for that stock. And I want to see what Apollo Microsystems is up to and Premier Explosives as well, given that Apollo Micro is looking to acquire that a tad above 41% promoter stake in Premier Explosives, 1.7% higher for Premier, and Apollo Micro will just come up for you on your screens next. So these are a bunch of stocks on our radar. And then, of course, Torrent Pharma as well. It's recalled Select Semalix injection, which is the pen batch following Dr. Reddy's product recall notification as well. So Torrent Pharma also may see some soured sentiment. But TCS has started off well. Kunal, other than TCS, do you sense a buying opportunity in any of the other IT names after the massive crack that we've already seen?
I strongly sense so. I think I think it's now high time for these IT stocks to start to come back into maybe an accumulative zone, or at least be not to be hated by the markets as such, and to be probably be in the better list. In that sense, because I think what you're seeing now is many of these stocks having a tendency to recover those major shocks which you've seen in the prices. Persistent was down, for example, 10-11% on a single day a couple of weeks back. And that stock, in the process of the next 1 or 2 weeks, post that sharp sell-off, has managed to recuperate and recover the losses. HCL Tech went through a very similar kind of a recent price correction. The stock has stalled, not just stalled the correction, but it's trying to make an attempt to try and make a dash back towards its 50-day moving average. Same is the case with the likes of Tech Mahindra. Coforge is on the verge of breaking its 200-day moving average. So there are many of these mid-cap and the blend of large-cap IT stocks which are starting to come back into a good recovery. And when we've seen price-wise and volume-wise these stocks come back into deep oversold territories on their monthly and the quarterly charts, the risk-reward is extremely favorable. So I believe that we could not just be looking at a minor rally for these IT stocks, but something which could be very, very meaningful.
In fact, I was just chatting with Safir Anand as well, strategist and investor, and he said that he was a buyer in Infosys the day it fell to 3 digits, which was, earlier this week itself. In fact, let's hear out a slice of that conversation. We'll get you a larger piece of that conversation at 10:10 today, and then, of course, the entire interview is something that you can catch today at 3:30, 7:30, and then 9:30 p.m. as well. Listen in. So basically, as people in Mumbai say, bhav bhagwan che, right? When you saw Infosys falling for that one split second into 3 digits, you thought that's a great buy.
In fact, I did buy. So,
Yeah.
Yes, you are absolutely right. And the point is that, this is where I'm trying to say that if I did not own this particular example for certain years, it's not as if it is out of my life. It is there, very much there. It's just that I had something better to buy. And similarly, if I have a better opportunity tomorrow in respect of any particular sector or any company, then I will have to explore whether I have the money to deploy, or I will use an existing stock to encash and generate the money and switch over just because of a better opportunity.
Okay, that interview in just a short while from now, but let's just check in on where the currency as well has started off in trade, and we've opened around 95.26 to the dollar as opposed to yesterday's close of 95.39. So some amount of minuscule strength is what we've seen. TCS, let's see where that stock has settled in at and where it's currently holding up after starting off. Okay, it's building up further, 2.5% higher now on TCS, and that should definitely rub off on the rest of the majors as well. By the way, this power grid as well, they won a bid for, one of the interstate BOOT projects. So look out for what power grid as well does. And I just want to check in on what Dixon as well is up to, given that the government has now cleared the JV with Vivo. So look out for what that stock as well is going to be doing, 2% higher. But yesterday's big movers, and you couldn't take your eyes off from what Kalyan Jewellers was doing, because it more than made up for the crack that it saw after its quarterly update coming in. Kaynes, Swiggy, Premier Energies, Novama, these were all the big buzzers in trade yesterday. Pankaj, wanted to understand where your thought is on the jewelry retailers after the backdrop of both Kalyan as well as Titan's quarterly updates, and gold financiers as well, bases your view on gold.
So, Aisha, on the gold side, our sense is that companies like Titan have come out with a good set of numbers, and I think there's good runway for growth because some of these companies, of this company in particular, is still not commanding double-digit kind of a market share. And I think overall sense is that this entire space is, even this company is talking of a 20% CAGR kind of a growth rate. Very few companies talk about that kind of a growth number. And so entire space looks attractive to us. While we don't cover Kalyan Jewellers, but what we like is Bluestone. It's a D2C player. And our sense is that this company has the potential to sort of deliver far more bigger set of numbers. The man manager itself is talking of a 50% CAGR in terms of growth, in terms of top line, along with better margins. So we like this entire space. I think in the consumption space, one needs to be very selective, and jewelry is one of them where we feel that at least on the growth side, companies are doing a lot more better.
Bluestone, that's the idea from within the entire jewelry space that Pankaj is recommending. But Pankaj, great to be speaking with you. Thank you for your time as always.